Hi all, this is Ashish Hyal here. Welcome again to Elliott Wave News channel by wavestrategy.com. And I'm going to talk about how to trade Nifty before the elections. It's going to be a very challenging ride. It's not going to be an easy ride, I would say. And most of the time markets have been consolidating rather than trending, is what we have been observing over past few weeks as well. So how do you go about trading Nifty in such kind of an horizon, and how do you probably trade stocks, or which stocks to pick up that has the potential to outperform the overall market, and how do you see them, how do you select them? So we are going to discuss very briefly about what methods you might look forward to and what is the overall outlook for Nifty in the coming week. And this was a very shortened week, and what we can expect now uh, coming forward in the next week when we have an expiry as well. So it's a very important month going on right now because of the event elections, and we have seen how Nifty has moved in the period of 2014 prior to the elections, how it is moving now prior to the election. So the movement has been very similar in those aspects. However, the rally which was there in August 2013 to the election period of 2014 was different in terms of the breadth, overall breadth of the market. So during that time, Nifty was coming out of a long term, or not long term, medium term consolidation and correction. And post that, the movement on upside was broad based. There were majority of the stocks that were participating on the upside. Also, if you look at the price to earning ratio during those period, it was at the reasonable levels. And now we are entered into some uncharted territory from P ratio as well. We have crossed about 29 and we are trading at a extremely elevated levels. But those have to be looked at from the investment perspective. I'm not talking about it from the momentum perspective. As long as the momentum stays in the market on the upside, you need to be in the trend over short term. However, at the same time, you need to be quick enough in order to exit from the market in case the trend changes. Because if there is a change in the tide, it's going to be very fast and very quick. We are trading at some uncharted territory, and that too led by only a few handful of stocks. It's not a broad-based rally. It's a few handful of stocks that are leading the rally. Even in today's market, Nifty had a huge gap up opening. It filled the gap almost immediately. It continued to consolidate and closed near the day's low. And this has happened after an 8 day of breakout that we saw about just a days back. So Nifty was consolidating and correcting for almost 8 days, 8 to 10 days. We saw a breakout happening on the upside. It took out the level of 11,760, which is the previous high, and then it went to just as much as 11,850, 860 in today's session, and again came back down. So that clearly shows that if you are a positional swing trader, you might not be necessarily making money on the market. Especially if you are trading Nifty, you can still make something out of it. But if you are trading specific stocks, you are probably going to be just trying to guess what's happening and what is wrong. And the markets are drifting higher, but I'm not making money. The very typical reason being it is Reliance Industries, which is helping the index to stay buoyant. And you can clearly see in today's session as well, Reliance Industries was up by more than 3%, and because of which the index is where it is right now. Otherwise, it would have resulted into a very sharp sell-off. There has been HDFC Twins. When I say HDFC Twins, HDFC Banks and HDFC Limited, which has helped the index to stay at the current levels. TCS, again an index heavyweight, has been helping it to be staying at the current levels. So these are the few stocks, and also the FMCG sector to some extent. These are the few stocks which are helping index to move higher. And if you put money in any of the other stocks out of these few stocks, you might probably not make anything out of it. And if you are trading options in the stocks which are not in momentum, it's just going to eat up the time value. And that's what the current market is right now doing. It is eating up time value. It is and the weeks being trading at around 2021, given that we are in an eventful month, we are already seeing some kind of a vast expensive options, and suddenly the option value starts deteriorating is what you are observing. So let us try and see on the chart the actual pattern. And the reason I'm briefing you up about the overall breadth of the market, because from that perspective you will understand that the entire rally in the markets is lopsided. The overall momentum is, or the trend is positive, but at the same time you should be cautious you should be quick enough to change the stand in case the tide turns and there is a break of the important support level. If you look at this, I have already drawn a channel on the prices, and you can clearly see there are two channels. Let me change the color of this one so that it's easily distinguishable. So the blue channel, which you can see, is a very short-term channel, which is connecting the recent lows, and we can clearly see over here how this channel has been working so well on the upside. Prices bounced back from that support level and came up here, and it's now trading just near the zone of 11,760, 750, which was the previous 2 times peak. So we can clearly see a big bear candle, but does not carry any implication unless and until we see a follow-up move which breaks and closes decisively below the low of today. So that's one very important aspect. The other thing you can look at it is a weekly chart. So if you look at a weekly chart of Nifty, we can see that there has been still from the lows which was formed at the level of 10,800. There is not a single weekly close which has happened below the low of prior weeks. So if you look at the entire movement, there has been a break of the prior week low, but there is not a single close. So unless and until we see a close below the prior week's low, this indicates that the market is continue to be in a buy on dips scenario. Also, one very important observation is that you shouldn't be buying the market on the breakout, because breakouts are normally not working in this kind of a market. If you look at it, 11,580 was taken out, but only to go to 11,700 and back on the downside. Again, currently 11,760 was taken out, but only to go to 11,860 and again back below 11,760 levels. So what is happening is, if you are waiting for breakout and buying the market, it's not rewarding. But if you are anticipating that it's going to form a low and buying the market, probably you are risking to that extent, but at the same time you are ensuring that you are going to make something out of it. So same thing here. If we see, so buy on dips is the market which I have been mentioning in my daily research report, in the monthly research, and also in the multi-bagger research which we keep publishing. Buy on dips is the market that you have to follow, because if you want to make money in the ongoing uptrend, you have to be buying it near the lows with a very important stop loss, and then probably in case it reverses on the upside, you are able to get some cream out of it. At the same time, you need to use a strict stop loss, because you are trying to anticipate a positive trend when it is falling as a buy on dip strategy. I would suggest you look at an hourly chart. Try to see an hourly close above the prior bar's low. So right now we are seeing the movement on the downside, which is happening, and once we see an hourly and a daily close above the prior bar's high, then that will be an indication that again the up move is resuming. So for now, if on Monday, since tomorrow we are not working, if on a Monday we again see a move which is going and giving an hourly close above 11,791, that's a short-term indication that yes, there is a possibility of that we are resuming on the upside. At the same time, use a very small stop loss, which is the low of today of 11,741. So you are risking only 50 points on Nifty and trying to ride the trend. Chances are high that you might get whipsawed in this kind of a short-term move, but at the same time, you are able to capture the trend on the upside, which is as of now ongoing. So do not go against the trend unless and until we see a daily close below the prior bar's low, that's one, and the weekly close below the prior bar's low, that's second. So these two are very important aspects, and buy on dips is the market scenario that you have to follow. From wave perspective, we might have completed wave D on the downside. We are in wave E of a diametric pattern. So you can see A, B, C, and D is done, and we are in wave E of a diametric pattern. It's too soon to conclude whether the E is complete as of now, or we are going to again move an inch higher towards 11,950, 12,000 odd levels, and there we are going to conclude this ongoing wave E on the upside. The other challenge is when everyone is anticipating a 12,000 move on the index, when everyone is super bullish, index normally does not go that place very easily, and that is why it's going to be tricky scenario. If you are trading on the market, it's not going to be an easy ride, as I said, and volatility is going to be high, but overall stuck in a range. So this is a very important observation that you have to make. When I talk about volatility is going to be high but stuck in a range, is a very important statement that I am making. This means that markets are going to be all over the places, but within a range of 200 points. So you need to be adopting a strategy which works during such kind of market, Bollinger Bands. This will work well because you have the tendency of buying near the support of the lower band and then selling it near the highs. So all of these techniques that I'm talking right now has been discussed in the Master of Technical Analysis training which we conducted, and also Master of Waves, where I combined all these methods together with NeoWave, Ichimoku Cloud, and time cycles. So those trainings I'm going to conduct again maybe sometime soon. I'll keep you informed. To ensure you keep getting the updates about them, you can visit wavestrategy.com, enroll and register yourself, and we'll get back to you. For now, what is the trading strategy for the day on Monday? Buy on dips, I would say as of now, but it's going to be an important day on Monday because we closed the week not on a very good note. We closed it forming a big bear candle, and Monday it's going to be important how we open and how we close Monday. And also at the same time, if we break today's low, then we are stuck in a range again. So a non-trending move of 10 days resulted into only a 2-day breakout, and again a non-trending move. So that is the type of market we are in right now, and stock selection is definitely going to be challenging with only 4-5 stocks leading the rally, especially Reliance Industries, and rest of the stocks are just not doing anything, and you are just waiting them to go up and away, but you are blocking your capital. If it's not working, get out of the market, stay on the sidelines. There is always going to be another opportunity. Don't try and keep averaging your stocks that are not playing out well. That's a very important advice from my side. And for detailed understanding and levels and how to trade, you can subscribe to the equity research report, which contains Nifty 3 stocks. You can subscribe to multi-bagger research. We publish multi-bagger research, and those have performed exceptionally well. Look at Bajaj Finserv, look at Honeywell Automation, look at Titan. These are the few multi-bagger stocks that we have recommended in the past, and they have done exceptionally well in these kind of markets as well. So you can keep an eye on the multi-bagger research report. Do not enter at current levels in these stocks which I labeled talked right now, because those are already up by 30-40% or maybe more from the levels where the initiation was there. So look at the multi-bagger research. If you want to capture the momentum on stocks, look at the momentum research report, and you will get amazing move to the extent of 5% to 7% or maybe 10% in this kind of a market. That's it from my side. Trade cautiously is my advice. Do not get carried away by just looking at index. There are times when you have to be okay when looking at index and just trying to see where it is going and waiting for a good opportunity to arise, a good trade setup to arise. And finally, buy on dips is the market right now. In case we break important supports on Monday, then it's going to change the strategy. But right now, that is the buy on dips and sell near resistance. Do not buy on the breakouts. It's not working. That's it from my side. Thank you very much. See you again next week, same time. And this recording will be available on the website wavestrategy.com. For any queries, you can call us on 99204 22202 or write to us at helpdesk@wavestrategy.com. Thank you. See you again. Have a wonderful weekend.